One example of what's coming is Netflix, which reported its earnings after the bell, and so it hasn't had an impact yet on the markets. I expect it to have a big impact on the markets on Wednesday, but Netflix came out and reported its first ever quarterly subscriber loss. They lost 200,000 subscribers on the quarter. Now, 700,000 of the loss was from Russia, because part of the Russia sanctions, I think, was in March. They basically canceled all the Netflix accounts out of Russia, and that was 700,000 subscribers. So, but for that, they would have gained 500,000. But the expectations from investors was for a gain of 2.5 million subscribers. So it was a huge miss, but probably more significant, Netflix is forecasting that in the current quarter, they are going to lose 2 million subscribers. And again, analysts had been expecting another 2.5 million new subscribers gained during the quarter. So that is an even bigger miss. That is why the stock is trading down 26% after hours. It's now about 62% below last year's high. This is the worst performing of the FANG stocks. This is the N in FANG. It was also one of the greatest stay-at-home stocks during COVID, because everybody just assumed that COVID would, I guess, go on indefinitely and people were going to continue to subscribe to Netflix. But what is happening to Netflix now is indicative of what is going to be happening to a lot of other companies during this inflationary recession. Because the big problem cited by Netflix is the fact that a lot of their household subscribers are sharing their accounts with other households. And so Netflix is basically getting ripped off by its customers who are effectively stealing its service. Well, what do you expect in this type of environment where people are doing everything they can to cut back expenses? Remember, I've been talking about the fact that as an investor, I want to own companies that are selling products that people need, not products that people want. Because you only buy the products that you want after you're finished buying all the products that you need. Nobody needs to subscribe to Netflix. In fact, if you have a friend that has Netflix, you can easily share their subscription. I think when you subscribe, you get 5 users, I think, with a subscription, or maybe there's a tier. But I know I subscribe, and I think we can have 5 devices simultaneously, which means several friends could use my account without paying for it, and it wouldn't impact my ability to use my account as well. I think this phenomenon is going to continue to expand. I don't know how Netflix is going to crack down on it unless it just reduces the number of screens that you're able to watch at any one time. They might do that, but in so doing, they're probably going to end up losing subscribers, not gaining them, because I think people will not like the fact that the wife and the husband can't both watch it, or the kids can't watch something while the husband's watching something. So I think a degradation in quality would also be a problem. But of course, that degradation of quality is something that won't show up in the CPI, because the extent that Netflix reduces the quality of your service, that's not going to show up as a price increase, even though it effectively is, because you get less service for your money. But also, I think a much bigger problem that Netflix is going to have is that a lot of people are only going to subscribe to Netflix maybe for 1 month or 2 months out of the entire year, because you can binge watch whatever it is you like on Netflix, and then when you're finished watching, you can cancel the service so you can subscribe to another service for a month that has the program that you want. You see, what's happened because of the success of Netflix, and oftentimes in capitalism, companies become victims of their own success. Because Netflix was so successful, so many other companies copied that business model, and now you have so many different streaming services competing for the same group of customers. And those customers are now spending more money on food, more money on rent, more money on energy, so they have less and less money in order to use to subscribe to all these services that they want, so they have less money to divvy up among a greater number of streaming services. So they have to figure out which ones they're going to eliminate, and they're going to have to find ways to economize, only using the services for a shorter period of time. Don't pay for the entire year when you don't need it for the entire year. And I think people are going to do everything they can to share services with their friends. Hey, you subscribe to Netflix, I'll subscribe to Disney Plus. Maybe another family subscribes to the Peacock Network or Paramount or whatever, or somebody else takes Hulu, and then they just share. And the more consumers are pressed to try to economize and struggle to make ends meet, companies like Netflix are going to continue to be the victims of this type of standard of living downsizing, which is going to happen. And of course, how is Netflix likely to respond to this? Because now they're not going to be able to get the type of growth that they got before. So if they want to grow the top line, if they can't grow their subscribers, the only thing they can do is raise their prices. And I think not only will Netflix be trying to make up for a loss of subscriber growth by increasing prices, but a lot of these other streaming services are going to do the same thing. And ultimately, they're all going to start eating into their own growth, because consumers just don't have the capacity to pay for all these services, especially when their incomes are declining at the rate they are.